Point number 4, how much premium should you pay? Here we're talking about Index Universal Life and Participating Whole Life. Let's start with IUL or Index Universal Life. Let's also draw a line right here in the middle. In the context of Index Universal Life, there are in general 3 types of premiums. The first one is the minimum. This minimum is defined by the life insurance company. Let's write it LIC. And it basically represents the minimum amount of money that you can put in a policy, assuming that you don't withdraw and you don't take a loan to guarantee the benefit for a certain period of time. For instance, if the policy is issued between age 0 and 60, the death benefit will be guaranteed for the lesser of 20 years or until age 65. If the policy is issued between age 61 and 85, the death benefit will be guaranteed for 5 years. The second type of premium is the target premium. That is also defined by the life insurance company. You can see the target premium as a recommendation, but also it defines the commission that the agent will get. The third type of premium is called the 7-pay. It basically represents how much money you can put in a policy on a yearly basis for the first 7 years. And this one is defined by the law here in the United States. So you have these 3 types of premiums. And you can basically pay anything in between here. So let me give you a quick example. Let's assume we have an individual that wants to get a death benefit of $500,000. It's a male, age 30, and the risk class is Preferred Plus. So for instance, the minimum premium could be something like $1,809. The target premium will be, in this case, $3,615. And the 7-pay will be something like $27,763. So remember that if you pay more than the 7-pay, then you don't have an insurance contract anymore. You will have an investment account with all the tax implication that comes with it. Let's go to whole life. In the context of whole life, we basically have 2 types of premium. Per contract, you are expected to pay a specific amount of premium every year. So the premium are level. So I will put level premium here. And then you also have the 7-pay. Just like in the case of an IUL, you can pay anything between the level premium and the maximum premium that you can put into this policy. And the way you increase how much premium you put in a whole life policy is by using paid up additions or PUA. And you can add to that the dividends. Usually mutual companies pay dividends at the end of the year, so you can also decide that you want to use your dividends as additional premium. So this basically summarizes how much you can put into a policy. It could be a good idea to target max funding the policy, meaning putting the 7-pay. And there are multiple reasons why it could be a good case, but it doesn't always have to be the case. So in the next episode, we'll talk about the benefits of maximizing the funding of your life insurance contract. Stay tuned.